want to bring in now Market Gauge Managing Director Michelle Snyder. Michelle, let's start with this the oil, right? Because there's a record amount of calls that have been bought. And I've been bullish, but I'm also a contrarian. When I see like that many people on the bandwagon, you don't jump off, but it kind of worries me. How are you playing this?
Well, I'm kind of on your page there, Charles, because right now we rallied into major resistance. If we just look at the price of Brent crude at $95, there's a tremendous amount of resistance right there up to about 100. That doesn't mean it couldn't go higher. But, you know, what's so interesting to me is the other ramifications of all of this going on with the oil market as we're going into a period where the Fed's trying to keep inflation under control and the dollar, instead of reacting to the upside like everybody thought, is going down. So really, to me, the biggest factor of the oil is what's going to happen to everything else in terms of the inflation play, and especially if we go into any kind of geopolitics with Iran and things escalate there.
Right. So on China, you know, there's a lot of ways to play China. I like looking at that KWEB, the big tech ETF. It's been screaming higher, up making a big move, but we know it's been wiped out. President Xi now focused on security, not economics, and these companies have paid the price. Are they attractive enough, though, from a risk-reward point to wade in right now?
Well, certainly some of them might be. What's so interesting is part of what China's been doing sort of quietly over the last few years is going into a service economy. And as they have an aging population and a more of a middle class, a lot of that population has shifted in their tastes. And so we've been looking at things like One World Spa, which is not technically a Chinese company, but it does operate in China. And also, you know, I still have to be interested in the solar energy in China, so Jinko Solar and JD.com. But I'd like to give it a little more time because of obviously the whole overall environment right now. But yeah, China, when we talked in the spring, we thought was a great investment. Then COVID turned out to be a problem. And if that really does reverse, then in 2008, we saw U.S. go down while China goes up. That could happen again.
Yeah, you got to keep it on your watch list at the very least. Speaking of which, I know you always watch the transportation index as a gauge in the economy. I think I saw a tweet or something from you. You're not happy with the way it's acting right now. What's the message from what's happening with Transpose?
Well, basically the message is that even though the airlines seem to be doing very well relatively, we have a situation where demand obviously is slowing, and that could be a lot of reasons. One could be supply chain coming back as an issue I've been sort of hearing. So with IYT, it did not clear the 200-week moving average while IWM, the Russells did, and the retail sector did. So that tells me that the strain of everything that we've been hearing about is starting to hit home there. And even though we held major support at 195 on our last trip south, if that breaks, I would be really, really concerned about the overall market.
Michelle, I got 30 seconds. What do you like right here?
I'm so about the metals, Charles. I know that I've said this over and over and over again, but I think that everything is unraveling. Chaos could ensue here as the Fed seems to not really have control. Not to mention sovereign spending has to go up to try to protect their economies. These are all super inflationary, and the metals as hard assets are starting to perk up.
Yeah, well, we've got them on the screen here, and they're perking up pretty good right now. Michelle, great seeing you. Thank you very much.